After being slammed last week with a ton of fundamentals, this week it's a little bit lighter when it comes to fundamentals, but when it comes to the technicals, we have some serious opportunity. Let's talk about it here at Capital Markets. Traders, investors, speculators, guys, welcome back to Capital Markets. It's your host, Cleveland Bishop. Hope you guys are having an awesome Tuesday. Okay, we're getting cracking here when it comes to markets this week. Monday, very slow. Okay, we didn't have too much data coming out, but we do have some things coming up. All right, we have CPI coming out for Australia this week. We also have an ECB meeting coming out for the euro, and we have durable goods coming out for the US. All right, so that's what we're going to be talking about. Guys, if you ever have any questions, please comment down below. We're going to be right here to answer, and make sure you guys stay subscribed so you can get notified when these videos get released week after week, day after day. All right, so first thing first, guys, Aussie CPI. Australia's been hit really hard. Lately in the news, we've been seeing how the Chinese yuan has been hurting the Australian dollar because, guys, remember, China is the largest trading partner when it comes to Australia. So all that Chinese weakness inside of its currency pair is translating over into the Australian currency as well. When China gets a little bit temperamental, or when things get a little bit scary, obviously all this happening due to the trade war, then Australia has to get a little bit conservative. Australia investments get conservative. Okay, so again, the reason why China and Australia are such large trade partners is because, well, they're two very developed nations on the same side of the planet. So when it comes to shipping routes and when it comes to FedEx flyovers, again, there's a shorter distance, which means many different people and different businesses are going to be saving costs rather than going all the way out to South America or US to buy products. So they're major trading partners. Okay, same thing with New Zealand, China, major trading partners. We've been seeing how since the Australian dollar has been weakening, that has been caused by this Chinese yuan and all of the geopolitical risk coming in with China and this trade war coming from the United States. Donald Trump mentioned last week how a $500 billion tariff potentially is going to be cracked down onto the Chinese economy. Remember, at first it was 50, then it was 100, and then he just went all out and said 500 billion. That sold markets off massively, the Chinese markets, which did end up hitting the Australian market. Okay, so with this Australian CPI coming out, Australia is one of the economies that has not been able to really see a comeback when it comes to inflation. So again, we're going to see how that reading plays out. Right now, here's a quick screenshot of the Aussie USD. You guys can notice that we are still stuck inside of a massive consolidation that we've been in for probably the past 7 or 8 weeks or so. Okay, so if we do get a good reading, we will see a nice pop. We will see a nice pop up into structure there for this Aussie US dollar, but any kind of negative reading I think is potentially already priced into the marketplace. I think we might just stutter step around and inside of this consolidation, because currently right now we're at the high of the consolidation anyway. So when that data comes out, and if it is negative, we'll just hit back down on the low of that consolidation or head back down to the lower half of it. Okay, so that's our idea for the Australian dollar. We have an ECB meeting coming out as well, guys, on Thursday. ECB, again, they're not going to be stopping the quantitative easing up until the end of 2018. Okay, and what they also mentioned, Draghi, meaning he's not going to start raising interest rates until 2019. All right, so again, that brought on a decent amount of strength when it came to the euro, but there's been a little bit more of a hawkish tone from Draghi, and we think that may allude to this Thursday conference. All right, so if we see any kind of positive data in regards to this ECB meeting, well, maybe here, take a quick look at this screenshot on the euro USD. Maybe that means we might be able to finally break outside of this very small range here, right? From the $1.15s all the way up to the $1.18s. That's where this market has been, again, for 7 or 8 weeks. All right, not too much US strength, not too much euro weakness. We've been very tight. All right, so I'm not sure if this is going to be the data to break us outside of this consolidation. If there, again, is a more hawkish tone coming from the ECB, we will start to eventually push back up into those 17 highs and maybe start hitting off back at those 18 flats. All right, last week we had inflation reading coming out for the euro, and again, it ticked higher. So again, that might be where this hawkish sentiment may be coming from. That's going to be dropping Thursday. Okay, and right before that drop, we will have a release for you guys just to keep you guys up to date as to what is going on. And last but not least, folks, we do have durable goods for the US. That's not coming out until much later this week, right? But again, the US dollar was hit pretty hard last week when Trump mentioned that he did not like seeing, that Powell, the head of the Fed, was continuing to raise rates, right? When you raise rates, you start to make money more expensive, right? Which could potentially slow down the economy, all right? Which obviously hurts him as well as a real estate guy. He doesn't want to see higher rates. He wants people leasing his buildings. He wants people getting loans so that he can get those loans closed. He doesn't really look at defaults. You know, that's not how Trump thinks. Bankruptcy for this guy is something that is good. So he wants to continue to see a robust, growing economy. And raising rates is the opposite of that. All right, here's some screenshots of those tweets there. Pretty interesting stuff. You're not supposed to be doing that as the president. So I do think eventually Powell will start to criticize Trump in regards to, hey, leave monetary policy to me. You do your thing when it comes to economics. All right, so guys, look, we're going to continue to see what happens in regards to fundamentals and the technicals of these markets. Make sure you guys stay subscribed. And as always, folks, capital-markets.com. You guys need to head over. We're one of the top brokers in the entire industry. Okay, we route from some of the best liquidity providers in the entire industry. Okay, and we have some of the tightest spreads, which means, folks, you are going to be paying less and less and less per trade. Okay, guys, head over to capital-markets.com. My name is Cleveland Bishop. See you guys tomorrow.